maybe this afternoon's crop progress report with the first condition ratings will give us that bounce.
Hi, everybody. Welcome back to the Comstock channel. I'm Marlon Bowling with you. Thank you so much for joining us. Well, with me today, I have Relph, and he is with Comstock Investments. Be sure to like these videos and share them with others as well. And also subscribe to them if you would. Hit that little bell icon down below. It helps with our algorithm. Eric, to start out the week on Monday, the markets kind of took a nosedive in most areas, save from maybe a few contracts on fat cattle. But on the grains, that was not necessarily a very constructive start to the month, was it?
Was not. It was definitely a meltdown Monday today. You had 20-cent plus losses in the beans and nickel plus losses in the corn. Wheat retreats almost 40 cents from its high in several different contracts. It was just kind of ugly across the board. Crude oil was a big leader today. I mean, when the biggest market in all of commodities is losing like today, we lost $3 a barrel at times. It doesn't look like we're going to hold those losses, but when you're trading $3 lower in crude oil, that's putting pressure on everything, especially the bean oil, which obviously direct impact to the beans. So a lot of pieces in motion, and it made for an ugly day to start the week and start the month.
Well, I'm sure a lot of folks are saying, well, what the heck? OPEC said they would extend their restrictions on production. Wouldn't that be a bullish thing?
Yeah, you would think so. I kind of perceived it that way early in the day, and I thought, man, I can't believe we're down 20 cents in the crude. 20 cents was a gift, apparently. But yeah, I think the general consensus was they were looking for further cuts. I think they were looking for them to bolster prices even more, and they didn't do it. They stayed where they're at for an extended period. And of course, that's subject to change on any given month whenever they decide to convene and change the rules along the way, because they can. So just a matter of time, and this is where we sit for now.
Apparently, when it comes to corn and soybeans, nobody's afraid of any prevent plant acres anymore, the way it seems in the market.
Yeah, I mean, this is rain makes grain. That's where we're at. It's the month of June and July. That is the theme, and that's what we're seeing now. I think you've only got about 5% of the corn and soybean growing regions in drought conditions right now. You've got some pockets in Kansas and Nebraska, but everyone else is all in all pretty well healed with few exceptions. And that's just the theology that they're trading right now. And, we've covered a lot of ground, my family and the company here. We've covered a lot of ground over the last couple of weeks, all the way from northeast Oklahoma to northwest Iowa, back and forth. And then this past weekend from northwest Iowa down to St. Louis and back. And the conditions are not conducive to a trend line crop by any stretch of the imagination.
Well, you have some photos that you took on that trip, and we have them here that we can share with everybody.
Yeah.
So let's kind of go through these here. Some of these, of course, they show some obviously high river levels. What rivers did you take photos of here?
So the ones that I actually had the opportunity to stop and take photos of, other than having a photographer in motion over the Missouri. But I did get a photo of the Missouri, and I mean, it's just full out to the edges of the banks. And you can see that we were actually crossing the steel bridge north of St. Louis, and it's just completely full up. You've got rivers that we crossed the Missouri, of course. We crossed the Mississippi when we were in St. Louis. We crossed the Iowa. We've crossed the Des Moines. We crossed the Little Sioux. All of them are either full or out into their flood areas. And it's just amazing the volume of water that's moving right now. And it's because we're so soaked up in these regions. Northern Iowa is the wettest it's been on record almost. Those records go 132 years, and it's just number one. But we did get the Ocheyedan River here locally. The picture that we have of the Ocheyedan River is actually on some pasture ground where our office manager, Katie, raises cattle. And they were having to move cattle as soon as we got back from St. Louis yesterday because the calves don't know to stay away. And so they had to get these young calves off of that pasture and move to another pasture as soon as we got back so that they could stay out of harm's way because the river is out. And then we've got some flooded fields all over the place in Clay County where the office is here in Royal, Iowa. And the areas around here, you can drive from here all the way to extreme southeast Iowa, and you've got a varying degree of problems, but there's ponds and bald spots all over the place. It is pretty remarkable the trouble that folks are having this year.
So you're talking all the way down to St. Louis from Northwest Iowa?
With very few exceptions in northern Missouri, there are problems everywhere. Yep. And it could be like I got a couple of different photos. One in Webster County, Iowa, you can see the definitive difference in color, and the stand's just horrible. The population's bad. It's very uneven, sparse areas within it. But what's most remarkable, I think, when you look at a lot of these fields that are 4 to 6 inches tall now, and granted that's very small. It's the 4th of June almost. But even those fields, you're seeing 4, 5, 6 different shades of yellow and green, which means we've had a lot of nitrogen seepage. That's not conducive to a bumper crop, right? And then I took another photo in Keokuk County, Iowa, right before we crossed the border into Missouri, and it was very similar situation. Multicolored, very thin, low population, and it was that way all over. And those photos aren't even, they're not the flooded areas or the bald spots and those kinds of things where there's just absolutely nothing.
I've heard some folks talking about concern about disease issues too when it's real wet like that.
Yeah, I mean, that's definitely something to consider as we move forward. And in addition to the disease issues, with whether it's mold or rootworm or whatever, in addition to that, you're not establishing a strong root system. And if we do ever turn this weather pattern around and you get into hot and dry, usually that shift comes with high winds, and frequently. You have a poor root system with high winds, that doesn't bode very well either, especially with a lot of the hybrids we're growing now. And this corn, you drive around Iowa in the middle of summer and the corn's 10, 12 feet tall. That's catching a lot of wind.
Well, and we've talked about that in the past that, we've both been through these when we lived on the plains where you have kind of a flash drought scenario. You can have a full moisture profile in that soil all the way down.
Yep.
But like you say, it can all of a sudden turn into a blast furnace when you get into like mid to late July and turn into the 95 to 100 degree temps for like a week or two.
Yep.
And it'll just cook that top 10 inches of soil or something. And roots are lazy now. Like you say, they don't have to work. They don't have to go down. But they can't build that taproot later on fast enough to get down to where the moisture is.
Right.
In late July.
They can't chase it. Yeah.
Yeah, I can't. That could be a concern later on.
Yeah.
That's not such a concern though when it comes to soybeans, right?
Correct. The situation right now is it going to dry up enough for the beans? Beans don't like wet feet. And so are we going to get some of these areas dried up, especially, here in Iowa over the next couple of weeks in time to even get the crop in? Let alone, is it going to dry down enough in a timely enough manner to be able to not have other agronomic issues as we move towards the 4th of July? So just so many variables. And meanwhile, the market is just discouraging planting almost. It's almost like it's just begging for prevent plant as we're sliding lower here while having trouble getting a crop in the ground for a lot of folks. It's really a remarkable scenario. And the morale of clientele and relatives and everyone involved in the industry is pretty low. I'm hoping for everyone's sake that they get some kind of reprieve here.
Well, I know you and the Comstock team have been talking for several weeks about trying to take advantage of any opportunity that did arise on a springtime rally.
Yeah.
And you have to admit, we've seen a pretty significant rally in all the grain markets. Is it too late to do anything at this point? I mean, we're still at elevated prices from where we were, let's say, a month ago, right?
I would like to think that it is too late now with current prices. Last week you had, and I'm pulling numbers from my brain, so let's not rely too heavily on that, but 22-cent slide in July corn and something like a 45-cent slide in July soybeans. Definitely November soybeans were 45 cents. So those are pretty remarkable pullbacks in 1 week's time. I would like to think, especially at oversold levels, we could catch some kind of a bounce back. Maybe this afternoon's crop progress report with the first condition ratings will give us that bounce. But I'd like to see some kind of retracement rally off of this last slide. I mean, we're down 5 days in a row in both corn and beans, and it's not little bits. It's nickel a day in the corn and almost a dime a day in the beans.
We're probably just a few days away now from the June WASDE report. Does that have potential to hold much of a surprise to the market here this month rather?
It can. The USDA always likes to surprise us, I guess. We rely on them for certain things. They prove unreliable, and I suppose the opposite could be true. When we're thinking we're not going to get much, we might get a surprise, and we have before. But the July becomes the bigger one. So I'm not expecting anything huge out of this June one because the July is big. But if we have condition ratings that warrant it, I think we could see a surprise here.
Let's talk about livestock. It sounds like we would have had everything in the red if it wouldn't have been for a late day bounce in the live cattle.
That's right. Yeah, that kind of took place after the 10:30, 11 a.m. time frame. We came off session lows in both live and feeder cattle and actually bounced back to respectable trade to start the week here after a slide lower last week that was only offset by the fact that we only had a 4-day trading week and Tuesday was actually positive. Were it not for that one positive day, it would have been ugly last week. So to be able to come out, get a little follow through selling, but then rebound from that was a good thing. And right now, the only fundamental factor that's really propping up this complex is box beef. Cash cattle was lower last week, albeit not that much, but about $1 lower across the country last week, but still lower for the first time in about 6 weeks. And feeder cattle cash was the same deal. We lost about $3.50 off the index last week. So to be able to weather that little storm and still trade somewhat steady here today to start the week, I think that was a victory. Although I wonder what the feeder cattle would have done without the lower corn today.
Wanted to ask you about that energy market that you kind of began our conversation with there. That was a huge drop in the crude oil market. Do you, if you're looking at that from a producer point of view, do you look at that as a gift, something to take advantage of, or do you think that means maybe another leg down where they'll get a better opportunity to top off their farm fuel tanks this summer?
It could be either, Marlon. I mean, we know the market's going to do what it's going to do, and if you think you're going to outsmart it, it's going to prove you a fool. But what we've been seeing is we've been seeing this $74 to $80 range in crude oil. And so I think anytime you can capture the bottom end of that range, especially in this environment where we're not overly volatile, we haven't been seeing the swings. Now all of a sudden we drop down to the bottom end of this range. I think it's a gift. I did have several folks tell me that they were locking up some 245 diesel. I think that kind of thing has to be taken advantage of in the cash market, you know, at least up until harvest, if not maybe start covering some harvest needs too on contract.
By the same token, while the crude oil was really getting pounded on, the natural gas market actually went higher, I believe.
Yeah, it did. Natural gas was the one that nobody could figure out where it was going to stop. It was almost like there was no floor in sight and you can't shut it off. And so are we going to end up in another situation like we did with crude oil in April of 20? Luckily, that did not happen. We did find some footing, and now we're trading well off of those lows. I think it's mostly technical in nature. Plus, we found some global demand for U.S. origin natural gas. So the weather has been benign as far as temperatures go. So there hasn't been a lot of talk about what it's going to turn into as far as a demand situation domestically. Although now you're starting to get some of the prognosticators calling for the hottest year on record or the hottest year in so many decades or whatever. And of course, usually you're talking about a 1 to 2 degree average difference. So it doesn't make all that much difference at the end of the day as far as energy consumption, but it draws headlines, it draws attention, and it draws trade.
All right. Well, Eric, thanks for sharing your thoughts with us today. I appreciate that as we kick off a new week here. Eric Relph with us. He is with Comstock Investments. And that's going to do it for this episode here. For Brianne Hendrickson, our producer, I'm Marlon Bowling. We'll catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.